With the US midterm polls going down to the wire and narrow margins in key races, especially that of the Senate, the Republicans secured pole position in the House of Representatives. Financial markets too were on the edge and keenly awaited the poll outcome. According to Nigel Green, Chief Executive Officer at De Vere Group, reforms to legislation on big tech can be expected to come to a halt in the US due to any gridlock. Pharmaceutical and biotech stocks could also capitalize on a Republican wave as Democrats are pursuing a bill to lower prescription drug prices. Also, energy stocks could be boosted should Republicans take at least one of the chambers. However, a relief rally could be in the offing for investors if historical trends are anything to go by. Since 1950, the average return for the S&P 500 in the 12 months after a midterm election has been 15%, suggests a Bloomberg report with no down years. This time too, Vaibhav Sanghvi of Avendus Capital Public Markets Alternate Strategies believes the outcome of the US presidential polls could spur a rally across markets.
One of the main issues going into the elections, and probably if you see the popularity ratings of the current president, is the management of inflation. Now, going into the election, we've seen an ultra hawkish kind of tone from the Fed. What I would think is basically probably wait for the outcomes, and at the end of it, try to see what is the Fed commentary subsequent to that. So what in our view is basically that Fed will likely pull off from the ultra hawkish tone post the kind of Senate elections, irrespective of whatever the results may be, and try to see how the economy is faring subsequent to that. In that respect, when we talk about the effects on the various global market conditions, from a global perspective, we may see, given the cash levels which are there into the global portfolios, we may see a respite rally probably coming about.
Sanghvi says investors' money could also chase Indian equities.
If the narrative kind of keeps changing from here onwards, saying that we are almost through to the rate hikes and incrementally things may get better, you will see flow of money coming back into the risk assets globally. Now, when we talk about risk assets, emerging markets is one of those kind of risk assets, and we will see dollar index probably kind of taking some amount of respite as well. So in all these scenarios, emerging markets are in a position which may kind of attract inflows.
Technically, Anand James of Geojit Financial Services expects the Nifty to move up to 18,600 over the next few sessions. He says the inability to move above 18,350 after the initial burst could invite long liquidation pressure, but it would require a correction past 18,200 for sizable downside. However, an outright fall is less expected though, before testing 18,600 levels. Today, investors will track the outcome of the midterm elections, October inflation and job data for the US. Back home, the initial public offer of 5-star Business Finance, Archean Chemical Industries and Keynes Technology India will be on investors' radar. Further, Q2 results of Adani Green, Ashok Leyland, Bata India, Berger Paints, Eicher Motors, Gujarat Gas and REITs will be tracked.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.